Hi all of you. Today we are going to start uh, the questions which is used in the interview related to the record to report. So before we are going to start, we need to know what we mean by record to report. So record to report is a finance and accounting process that collect, process and deliver information. Actually, it is used in the corporate to deliver their financial information related to the accounting. So for the purpose of accounting purposes, they ask some question related to the accounting, so that it will helpful for them to uh, collect the information uh, from the uh, person who are giving to give the interviews, and a person have a knowledge related to the accounting. So first we are going to know, uh, uh, like first question is, what are the golden rules of accounting? So according to golden rules, there are three rules of accounting. First related to the personal, then real, and third is nominal account. So for a personal, there is a rule that debit the receiver and credit the giver. uh, so whenever we are going to sell goods on credit, so the person to whom we are going to sell the goods, that person will be debit, and uh, and credit side is sales. So when we going to sell goods on credit, so our entry will be Siam account debit to sales account. Like if we are going to sell goods on a cash basis, so here we delete the name Siam or debtor account. Here we put the cash because cash is coming, and the reason is sales. So because cash is not coming here, so that's why we are putting Shyam's account debit, and in a credit side is a sales. Then our next entry is when we purchase goods on credit uh, from Shyam, from Ram. So in that case, when we purchase the goods on credit, so here our entry will be purchase account debit to Ram's account, because we are purchasing the goods from Ram. So here according to the rules, personal rule, credit the giver. So because we are purchasing the goods from Ram on credit, so here we put the Ram account here. So if we purchase the goods on a cash basis, so here we put the cash because we are purchasing goods on credit, so we put the name here Ram's account. So according to the uh, golden rules of accounting, personal account will be debit when we going to sell the goods on a credit, and if we purchase the goods on credit, so the person to whom we purchasing the goods will be credit here. So I hope it will be clear for you guys. So our next part is real, or we can say asset account. Whenever we are purchasing the goods, assets, so in that case, we will debit that asset, and when we sold the assets, then it will be credit. So here first entry related to the assets, when we purchase the machinery or assets, so in that case machinery account debit to cash account. Like we have purchased the machinery on a 50,000, so our cash is going, and reason of going that cash is machinery. So when our cash is coming, then it will be debit. When our cash is going, it will be credit. So here if you see here, the machinery is debit and cash is credit, and in a next part is it will reverse the entry, because machinery, we are going to sell the machinery, so in that case machinery account debit to cash uh, sorry uh, in that case our entry will be cash or bank account debit, and here our entry will be to machinery account 40,000. So I hope it is easy for understand to you guys. So our next part is nominal. So in that case, according to nominal account, expense will be debit and income and gains will be credit. So our first entry related to the expense. In that case, uh, when we are going to paid the rent, so our entry will be rent account debit to cash, because our money is going. In that case, our cash or bank will be credit, and the reason of credit, that cash and bank is expense, that is rent. So our entry will be rent account debit to cash. And in case of income, our entry will be bank account debit, because money is coming, so in that case it will be debit. When money is going, so it will be credit. So because money is coming in this case, so it will be debit, and the reason of this money is commission, so will be credit the commission account here. So according to the nominal account, whenever the expense is coming, so it will be debit, and income, and in the case of income and gains, it will be credit. So I hope golden rules is cleared for you guys. So now we are uh, going to start about the accrual part. So what do you mean by accrual? Generally interviewer asks this question related to the accrual. They want to know, do you have a knowledge of accounting or not, because all corporates use the accrual concepts for their accounting. So what do you mean by the accrual? So according to the accrual concept, revenue or expense are recognized in the books of account when they have been earned or incurred but not yet paid. It means even you have purchased goods or delivered services, or or you have taken goods or services. So in both the cases, you have to record, even though you have not paid the money to your customer, to the debtor or creditor. So our first entry is when goods sold on credit to Shyam. So in that case, Shyam's account debit to sales. And when goods purchased on credit to Ram, so in that case our entry will be purchase account debit to Ram's account. If you see here, so here, because we have purchased the goods on credit, in even we have not paid the money or received the money, in both the cases we have record it in our books of account. So and because we are recording, it is on the basis of accrual concept, so we have to record these entries. So our next part is deferred revenue, or we can say advance expense, or we can say it prepaid expense. In all cases, interviewer want to know whether you have a knowledge of deferred revenue expense, advance expense, or prepaid expense or not. So yeah, so we need to give the answer that deferred revenue expenditure refer to the expense that are incurred in one accounting period but are recognized as an expense in coming period. For example, I have paid the amount to the software company, like I have purchased an antivirus. So uh, I have to pay the money. For example, 1,20,000 I have paid. So but even in this case, I have paid the money in the starting of the year, for example 1,20,000. So but I am going to use this service in the coming months. So in that case, I will amortize that as software amount in the coming month. Here I have given an example. If we see a software manufacturing company which manufacture antivirus for computer, software company collect annual payment 1,20,000 for the software which is supposed to use every month by the customer. After 1 month, we will book 1,20,000 divided by 12, that is 10,000 per month to the profit and loss account. but uh, interviewer want to ask what is the treatment of deferred revenue expenditure. So first we have to record that expense as an asset in our balance sheet. Then it will amortize on a monthly basis. So our entry will be software expense account debit to deferred revenue expenditure, or we can say advance expense account or prepaid expense account, that is 10,000. Here I have written that deferred revenue expenditure transfer to the expense account. Then our entry will be then we will transfer that software expense into the profit and loss account. Then our entry will be profit and loss account debit to software expense account. Here I have written that expense charge to the profit and loss account. So I hope it will be helpful for you guys. And next our part is what is mean by deferred revenue income, or we can say prepaid income. So our answer is deferred revenue, also known as unearned revenue, means we have received amount, so it is our liability, not a revenue. So uh, we call this as a unearned revenue or unearned income. Refer to the prepayment a company receive for the goods or services that have not been delivered. Means you have received the money. If you are not giving the services or goods to your customer, but you have received the money in advance, in that case you have to recognize in your books of account as a liability, not as an income. So our I have a two example below. Rent paid, rent payment received in advance, and prepaid insurance premium. Means uh, like we have received the uh, rent in advance, and we have received the insurance premium amount from the customer in advance. So for example I have given an example below. If we have paid, if we have received, sorry, received or rent or insurance in advance, then in that case, like for example 2 lakh 40,000 I have received as an advance. Then after after 1 month I will book 20,000 as a income and transfer it into the profit and loss account. Until that, I have to record that advance payment in as a liability in a balance sheet. So when we book that income in our books of account, so we will post the below entry deferred revenue income or advance income or prepaid income, that is 20,000 to income account, that is 20,000, and then it will be transferred to the profit and loss account, income account debit to profit and loss account. Or you can say here, for example I have taken an example like uh, prepaid rent, rent received account or income account, I would say. And here when we transfer that rent received amount into the profit and loss account, then we will post the entry rent received account debit to profit and loss account, and it will be shown in the profit and loss account buy side, so it will be treated as an income. So before when booking these entries, we will reflect that amount as a liability. So when we receive that amount, so we will post the entry cash account debit to deferred revenue, or we can say prepaid rent, uh, or advance rent, we can say. So I hope it will be helpful for you guys. So our next part is what do you mean by reconciliation, or we can say account reconciliation. So here I have written that account reconciliation is an accounting process that compares two sets of record to check that figures are correct and in agreement. Like we have a bank reconciliation, vendor reconciliation, prepaid reconciliation, asset reconciliation. uh, I would say an example related to the bank reconciliation. So we have a passbook and a cash book, which we are recording in our books of account. Bank record and our record, which is used in the companies. So we will tally that amount. Like for example, uh, in a passbook, it is showing that passbook balance is rupees 1 lakh, but when I examined our books of account, then it is shown balance rupees 1 lakh, it is shown our record is 98,000. So in that case, when we have checked the book both books, and then I found that interest has been credited by the bank rupees 2000. So this is called an open account until we find out that amount. So after finding this 2000 rupees, we will show in our books of account. That is called a reconciliation. So it is a bank reconciliation. Like the bank reconciliation, we have a vendor reconciliation, we have a prepaid reconciliation, we have an asset reconciliation. So I hope it will be helpful for you guys. For example, if the interviewer asks you about the about how do you have a knowledge, do you know how many kinds of reconciliation used in a corporate. So you can give an example like bank reconciliation, vendor reconciliation, prepaid reconciliation, asset reconciliation, and there are more reconciliation as well. They are also called a balance sheet reconciliation, because bank is a part of balance sheet, vendor reconciliation is a part of balance sheet, prepaid reconciliation is a part of balance sheet, and asset reconciliation is also a part of balance sheet. So if the interviewer asks you about the reconciliation, do you have a knowledge of balance sheet reconciliation, so you give an example like bank reconciliation, vendor reconciliation, prepaid reconciliation, asset reconciliation also. And if the interviewer asks you about the bank reconciliation, and they ask you about the example of the bank reconciliation open item, so you can say about the check deposit but not cleared, check issued but not presented for payments. So these are the amounts or examples you can give in front of the interviewer. I hope it will be helpful for you guys in an interview. So our next part is contingent liability. So what do you mean by the contingent liability? I have seen that many time interview want to know, do you have a knowledge of contingent liability? So here the answer that Contingent liability are the potential liability that may or may not occur depending on uncertain future event. They include pending lawsuits uh, I have an example of Maggie. So there are lots of case in the past years I have seen in a Maggie brand which has been done yet. So if the if the cases are pending in the court, so it depend on the future that whether it will fruitful for the company or not. So all the liabilities which depend on the future but is not certain, that is called a contingent liability. So guys, I hope this will helpful for your interview part. So please r- r- write down all the questions and answers in your copies, and record a video in front of camera and give your interview. And please let me know it is fruitful for you guys or not. And I hope it will help you in interview. So thank you guys, and please subscribe my channel, and please let me know if you have any questions. Thanks. Thanks a lot.